Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look at the dollar versus Canada. Before I get into the technicals driving this currency pair, the Bank of Canada will meet tomorrow and announce their latest interest rate decision. The expectations are for a 25 basis point hike to 5% from 4.75%. This will be the second consecutive meeting where the Bank of Canada did raise rates. Prior to that, they had three successive meetings where they kept rates unchanged during their conditional pause. Traders and analysts think that this would be the last hike for the year. Time will tell, of course, data dependency, so on and so forth, but the markets will be paying attention to what the central banker has to say as opposed to what the actual decision is. In my opinion, we'll see how all that plays out tomorrow. Taking a look at the technicals, I'm going to focus here on the 4-hour chart to start off with. If we take a look at this move down from the high price in May to the low price that we saw in the month of June. The price moved up to the 50% retracement level near the 133.84 level and found willing sellers against that level. That was in trading last week. We saw sharp move to the downside on Friday with the employment data coming out of the U.S. and Canada, leading to that decline in trading on Monday. Here we had up and down price action, and in trading today we moved lower and then bounced higher. Now, off of this chart, we are in between the 100 bar moving average on the 4-hour chart and the 200 bar moving average on the 4-hour chart. Those come in at 132.34 and 133.33. So there's about 100 or so pips between each of those levels, which is pretty wide, and we're sort of toward the bottom end of that range. This swing area right here between the 132.71 and 132.85 level in trading today saw the price move up and extend briefly above the high of that area here, but has since rotated back to the downside and currently trades below the lower end at the 132.71 level. The current price trading at 132.67. So the sellers are kind of trying to keep a lid on the pair on the lower half of the 100, 200 bar moving average on this chart, and also trading below this swing area right through here, which is more negative. On the downside, of course, if the price were to move below the 100-hour moving average, that would increase the bearish bias. Also, this swing area right through here, we need to get below that area as well, down to around the 132 level on the downside. Conversely, if the price starts to move, I think, above the 85 level with more momentum in trading here today, we could see a rotation back to the upside. So that's sort of my upper bias defining level in trading here today. Pay attention to that. Let's just take a quick look at the hourly chart, see what that looks like. And when you look at that chart, what we see is the price tried to hold the 200-hour moving average in trading here yesterday and trading here today. The market moved below that level, but as you can see, we've traded back above it, and we're now currently back below it. Here's that swing area that we saw on the 4-hour chart. Same levels here in play. We tried to move above it here, could not do it, so rotating to the downside. So even on the hourly chart, we are below the 200-hour moving average and below the 85 level, and also the 100-hour moving average, keeping the bias a little bit more to the downside here for this currency pair. That's higher in the Canada dollar, of course. So that's all I got on this currency pair for trading here today with the key levels in play. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.